Now that we've experienced one of the most significant bills being passed in the short history of crypto industry, let's ask ourselves the question, what's next? And to really appreciate what's coming next, let's just briefly understand what this milestone really means as Trump signed the stablecoin bill on a Friday. And let's understand what this really meant, or what this really means for the crypto industry and going forward. So first of all, let's understand one thing here. The Genius Act, literally, what does it do? It literally creates more clarity, because so far there was no clarity. So far there was so many gray areas, but now with all of this, there's more clarity right now, and straightforward and simple regulatory framework, so that many institutions can go by. And this also comes along to literally fulfill the promise that the dollar is not only going to be backed by the US, stablecoins are not only going to be backed by the dollar or pegged to the dollar, but it's also going to ensure that US, or rather the US dollar, remains the global reserve currency. All of this said, this literally means that it could be, perhaps, and this is quoting Trump, the greatest revolution in financial technology since the birth of the internet itself. So this is a bold statement, because the internet, as we know, is a major technology. And claiming that this passage of the bill is literally greater, a much more greater revolution in financial technology since the birth of the internet itself. What this literally just means is that the financial industry is due for an upgrade, for an update, to be up to date with the latest technology, to just make things more transparent, more efficient, more accessible, and more sustainable. And it's going to do that with the passage of this bill and the usage of this blockchain technology. Another thing I want us to just look at is that what this really means is that the whole purpose of this is also to secure the dollar status as the world reserve currency. And this is something that is very, very important, right? And another thing also is that we need to understand that the whole purpose of this bill is to provide issuers of the stablecoin with strict requirements. There are requirements for backing the stablecoins, and these requirements are straightforward. These should be backed, the stablecoins should be backed by cash or short-term treasury debt. This is where this bill really gets interesting. This is the takeaway of this article right now, because the purpose of this video is for us to understand, okay, now that the bill is passed, now that we've gone through this major milestone, now that we understand that this is the major revolution that goes beyond the internet itself, we understand that there are frameworks, there are guidelines, there's clarity in terms of how the issuers of these stablecoins are supposed to be backing their stablecoins with cash or short-term US debt, literally. What does all of this mean? What does all of this mean? Let's move forward and understand even more. So another thing I want us to understand is that there are so many challenges that come along with it. And if there are no challenges, there are no solutions. If there are no challenges, there are no opportunities. So challenges are always good. So let's understand some challenges that come along with this. So here are risks that are listed here. And this is some of the risks are that now that this bill is being passed, the stablecoin bill is passed, this is literally going to turn stablecoin issuers into being their own banks. So imagine Circle being their own banks. Imagine Walmart, Amazon, Microsoft, Apple. They're now literally becoming their own banks. And with that, they literally potentially can bypass most regular banking protections and policies themselves, right? And furthermore, another challenge, also risks that are being mentioned here are like this will lead to a formation of a centralized entities, because as we know, especially in the tech industry, there are institutions that are very cash heavy. They have lots of liquidity, cash flows, like Apple, Microsoft, Google, Nvidia. They're sitting on hundreds of billions of dollars, and they have millions of users, consumers, clients. And when issuing their own stablecoins, they can rapidly gather or put together a large community around them. And because they're so cash heavy, liquidity heavy, it can turn to stablecoin issuance can turn into centralized entities, right? However, what I want us to also understand with all these challenges that are being thrown out here is that while all this fear mongering is being thrown out, and another risk is that it may lead this centralization of entities and monopolizing of stablecoin issuance potentially could lead to a financial crash, such as 1929, which is known as the Black Monday, and 2008, which was the housing crisis, the housing bubble. So these are risks, potential challenges that are being thrown out there, along with the passage of the stablecoin bill. And without these challenges are not here to put fear or, question the importance of this bill, but rather they're here to create opportunities for these challenges to be addressed, and also to create a competition, because now it's an open floor. Every institution, bank or non-bank, will be able to be part of this. This is another thing right here. So finally, what I want us to understand here is that with the Genius Act passed, right, now banks, non-banks, and credit unions could dive into the market by issuing their own stablecoins, right? That's something that we can understand now. It's an open floor now. Everybody can participate. This is why the example of 2008 financial crisis housing bubble was mentioned earlier, because now it's open. It's back in the early .com time, where major institutions, whether small market caps, large market caps, can now issue their own stablecoins due to the passage of this bill. But now the beautiful thing about this is obviously only those that do it in a sustainable manner, strategically, efficiently, sustainably, are going to come out victoriously, right? So not all stablecoin issuers are going to win. Only because they're allowed to issue their own stablecoins, not all of them are going to catch on. Only a handful, and eventually only 2 or 3 of them are literally going to take off and dominate. So this is just giving us an opportunity as early participants in this industry to be part of this gold rush in this very early stages, because we still experience so much volatility in this industry because exactly this. There's still lack of liquidity in the industry. This is why small movements really shake up the industry, shake up the markets significantly. So this just serves us to bring more liquidity into the industry, make crypto through stablecoins and the blockchain technology mainstream, and bring more awareness, bring more users on chain, and create more products for retailers to be able to use on chain. And the largest use case right now at this moment is the stablecoins, simply through payment processing, remittances, and so on and so forth. It's cheaper. It doesn't have to go through the tedious waiting periods of days or even weeks to process them like through traditional banks. So there's an upgrade to the financial system that is much needed through the blockchain technology. Now, what I want us to also understand here is that this final part right here, there's always been this challenge right here, the US deficit crisis and the debt crisis, the inflation. All of these are challenges that we always read about consistently. We've been reading about consistently. And ironically, even in this article, they're highlighting here that CNBC, which is this article is from CNBC, and this is the title of the article, America's Deficit Reckoning, right? A very dramatic title. And they explicitly say here that they only explore the consequences, not how to solve the budget deficit, right? So basically, they're giving us a heads up. We're just talking about the consequences. We're just highlighting the challenges, but we're not coming here with solutions. We're not looking at how to solve this, right? But rather what's at stake if we don't. So this is something that unfortunately is causing so much fear, doubt, and uncertainty in the industries, because we only discuss, or articles such as these only focus on the dilemma, the crisis, the challenges, the problems, but none of them literally comes with a solution, where the solution is literally already in front of us. So the beautiful thing about this bill, and this answers now, we're coming full circle. What's next? The beautiful thing about this bill is going to bring trillions of dollars in liquidity onto the market, specifically because Ethereum is the dominant stablecoin hub, right? Over 60% of all stablecoins on chain are on Ethereum. 75% of real world assets, tokenized treasuries, are on Ethereum. 99% of commodities are on Ethereum. Tokenized commodities are on Ethereum. We get the idea. So we are not focusing on the consequences here in this video. We're not focusing on the consequences. We all know about it, right? We all know what's at stake. We know about that. We are focusing on how. What's the solution? How can this be solved? And the blockchain technology is literally the solution. Specifically, an asset that is also a technology at the same time, which happens to be Ethereum. And the challenges right now in the industry are, how can we find an asset that central banks can use to issue new or fresh liquidity to inject into the economy, however, without causing inflation? And the only way to do that, and the only blockchain, smart contract blockchain, and the largest smart contract blockchain to achieve that, or has the potential to do that, is literally Ethereum. Because due to its proof of stake consensus and due to its deflationary mechanisms, that the more Ethereum is adopted, the more it's being used, the more applications are built on top of it and transactions going through, the more deflationary it gets. And the more transactions are happening, the higher the staking rewards as well. So we need to understand this, that we have the solution right in front of us. So let's not just focus on the challenges and the hardships and the risks, the potential risks, and feed off of these fears and uncertainties, but rather let's understand and embrace that we are at that time where this is the technology of the future. It's both an asset and a technology. And it's the platform where applications are going to be built that we'll be able to use on a daily basis. This is where the updated version of the financial system is being built on top. And this is exactly what President Trump was saying here, is that this is literally the greatest revolution in financial technology since the birth of the internet itself. This is a fact. This is true. And we need to embrace this. We need to understand this, that literally what's just happened with the passage of this bill, this enables stablecoin issuers literally to use cash, which is in US dollars cash, or short-term treasury debt. So they're forced to back these stablecoins, right? They have to back these stablecoins that they're issuing with cash or short-term debt. What does this mean? It will bring demand both for the US dollar and for the treasury bill. And once there's a lot of purchasing going on for treasury bills, this means that the inflation rate is going to come down, because the more treasury bills are being bought, the more debt is being purchased through these issuers, the lower the interest rate. And the lower the interest rate becomes, that means getting access to credit, mortgage, liquidity is much cheaper. And this is exactly what's causing, or what will trigger, or will be a catalyst for a bull cycle, for a bull run. And now imagine we're at the early stages where all these institutions globally are now enabled to issue their stablecoins. Imagine how much demand in the hundreds of billions and trillions of dollars bring demand for the treasury bill. This will significantly bring down the interest rate on mortgages and credit card interest rates, and so on and so forth. It will ensure that access to money, to liquidity, is much cheaper. And this is exactly what this market needs: a fresh injection of liquidity without causing inflation, or at least having demand for the treasury bill, and at the same time bringing back demand for the US dollar, and having a platform, a technology, an outlet that makes dollar accessible to the world on chain. And as we speak, the US dollar is the only fiat currency right now that is literally dominating on chain. There is no yen or euros. There are, but very insignificant amount. Right now, the stable coins are predominantly in US dollars. So this is exactly what the US intends to do, to dominate this digital age by dominating the stablecoin industry, making it predominantly in US dollar. Secondly, and making these stablecoin issuers having to be backing their stablecoins with US dollars and short-term US debt. This will strengthen and bring even more liquidity to the debt market. This will bring down the interest rates, and this will lower the mortgage interest rates and loan interest rates, credit card interest rates, and so on and so forth, and make access to liquidity cheaper, triggering the bull market. And because we are so early in these stages, this will bring a lot of liquidity on chain on Ethereum, making Ethereum mature and less volatile because there'll be so much influx in liquidity. And with these tokenized assets coming on, with these new financial products coming on, with all these collateralized, tokenized collateral network that JP Morgan has, that will be using tokenized versions of these ETFs from BlackRock as collateral for the OTC, over the counter derivatives market. This is exactly the plan for all of this. Use tokenized assets through in works in partnership with BlackRock. Turn the ETFs into tokenized assets, and then use those tokenized assets as collateral for the derivatives market. Meanwhile, the stablecoin issuers, such as BULLRUN as well, it's a stablecoin, needs to be backed by US treasuries, tokenized US treasuries, which BULLRUN token is also tokenized US treasury. And then this will bring demand for US treasuries, the bond market. This will lower the interest rates. This will bring demand for the US dollar. And this will trigger a bull cycle because now accessing liquidity is much, much cheaper. And that's exactly what's next. So this answers the question of the purpose of this video. Now that this bill is passed, despite all these challenges and risks that are being talked about, but nobody seems to come up with a solution. What's next? What's next is we are about to experience a liquidity rush on chain. We're about to experience new products. We're about to experience lower interest rate due to the demand that these stablecoin issuers will bring for the bond market and to the US dollar. And US dollar will be the undisputed global reserve currency because predominantly on chain, stablecoins are still denominated in US dollar as well. And they're way ahead of the competition right now. So that's what's next. A prolonged multi-year bull cycle is ahead. A prolonged liquidity rush period. A easy money period, just like it was during the dot-com bubble, just like it was in 1929, and just like it was in 2008 during the housing bubble. So we're about to experience a rush in liquidity, a competition in issuance of stablecoin, bringing demand for the US dollar, bringing demand for the bond market, lowering the interest rates, making access to liquidity cheaper, making access to mortgages cheaper, to credit cheaper. And we're about to experience an easy money period, a multi-year bull cycle. And we need to get ready for that, community. And having an ecosystem that is ready for that, by having mechanisms in place to retain liquidity, to remain scarce by banning supply, to use its volume efficiently, to even accumulate USDC distributions for the stakers. That's what makes an ecosystem sustainable, efficient, and make the most out of this bull cycle, out of this easy money period, out of this multi-year bull cycle that we're about to experience, that is going to flood the chain, the blockchain, Ethereum blockchain, with so much liquidity, so much volume. Let's make the most out of it. That's what's next, community. So that's it for today's video, and I hope this message was clear and made sense for us. So let's have a dialogue down in the comment section below. Let me know what you think about this period, this liquidity rush and easy money period and multi-year bull cycle that we're about to experience. How are you going to go about it? And what's the platform that is efficient and sustainable enough to make the most out of this in your eyes? With that said, have a wonderful rest of your weekend, and until we meet again, bye-bye, community.